All right, so artificial intelligence has been a big theme on today's show. In fact, let's face it, folks, it's going to be a big theme for the next decade. It's going to be one of the greatest money-making innovations ever. However, there's going to be just as much money lost on it as well. Here's the trick. You want to ride the various waves out there. This is the picks and shovels period. You hear a lot of people talking about it, but Goldman just released a really great table of names that we could see in near-term catalysts that sort of join that. I mean, the thing is they all kind of need a jolt. They put potential point. This is a great chart. They tell Pence, for instance, they say probably on their next investor day, which is next month. Snap, golly, they say in late October. That company, in my mind, no, I wouldn't buy it until they got rid of Evan Siegel or he had a Mark Zuckerberg epiphany. Expedia and Bookings also on that list as well. Expedia really needs it. Bookings, they're doing extremely well. Also on the list is Roblox. Roblox, by the way, their news may come on Investor Day, which would be a great birthday gift for me. It's on the same day as my birthday, and I'm in the stock. It's been getting hit lately. But it does bring me to something else that bugs the heck out of me. Wall Street is going the opposite way. They keep guessing when the tide is going to turn rather than simply riding what's working. For instance, in the past week, I have seen so many charts that had the same theme. They all caught my eye. The U.S. stock market versus Japan. Look at that. For years, Japan crushed our market, but guess what? We've been dominating them. I mean, everyone, I remember when everyone said the land of the rising sun was going to overtake us for the greatest economy in the world. Well, it hasn't happened. That was 35 years ago. Our market has outperformed there since. I'm reading how the U.S. has trounced China's stock market since the start of the global financial crisis. And then, of course, there's our friends at Richard Bernstein, a brilliant firm. But it's mind-boggling, right? Because they point to the outperformance of U.S. tech over global equities. And the firm says that right now it has its lowest U.S. exposure at any point in the firm's history. Listen, they're not alone. Bets on emerging markets have been soaring. My problem, though, is I don't see the catalyst other than maybe a hunch that it's time, right? And we know that that's not the way to invest. I would much rather overweight in my portfolio your next major AI, right? That's coming in, that's beating. Listen, this whole movement, it's going to change the economy, it's going to change the markets, and it's just only now beginning. So I just say you got to ride these waves, right, until they don't work. So word to the wise, until or unless it's clear that the U.S. stock market is going to somehow dive. Oh, and at the same time, as we're diving, the rest of the world stock markets are going up because that rarely happens. I say stay for the ride. Stick with the good old USA. Every company we talked about today that's changing the world, born and bred in the United States. So why not? Why not? The only thing you may be worried about is that you waited too long. But if you start messing around and guessing when emerging markets are going to do well, all you got to do is make a bigger mistake. So find a couple of great names, homegrown names that are working right now. Invest in those because I'd rather ride the wave than guess when the next big one's coming.